Start it up now.
Okie dokie.
Here we go. Hello, everybody. Welcome to TraderMerlin Show. It is your Thursday edition, one day close to the weekend. Hope you all had a fantastic trading day out there. Of course, if you are in the cryptocurrency world, you're absolutely loving it today. We'll probably have to do a special show next week just on the crypto space, given how unbelievably insane it has been. So for those of you along crypto, congratulations. Even in the face of bad news out there, we see markets moving to the upside, and that's the focus of today's show. We're going to have Weil joining us here. The topic is this, and this all stems from a listener question from a gentleman named Tim. Is stocks. It says, are they cheap or are they expensive? And of course, Weil is our guest today, and as you can see, he's got a nice background going on there. Craig, how you doing?
Hey, Merlin, how are you? Good to be with you this afternoon.
Yeah,
once again.
It's good to have you with us. He's normally the Chicago guy. He's usually up in Chicago, and today he's foregone that. He's actually sitting in the south a little bit, aren't you?
Yeah, we took this opportunity, my wife and I, to visit one of our daughters and her husband and their two grandchildren. They rented a house in Fort Myers to get out of the Chicago area. The kids are remote learning, and so they figured they could do it from anywhere. So they were proactive. They rented a house in the Fort Myers area. We drove down a week ago, and we're just hanging out. We're helping the kids with their work and having a little fun at night. And on the weekends, last weekend, we went to a gorgeous beach, Fort Myers Beach, if anyone's ever been there. Wonderful.
Nice.
And we social distanced, and we're just kind of doing what we'd be doing in Chicago, although we
except shivering.
Outside.
Except
So nice.
shivering, yes.
Except shivering.
Yeah, except shivering.
May look like I'm in an office building, but I got a fake background. So.
Oh, yeah, I was looking. That's a pretty nice pad they got over there. That's really. I love the loft. All right, so let me go to the listener question here. This is all the discussion today. We'll start here, and of course, guys, Craig spent many years on the floors out in Chicago, so we can talk about that and go through some stories or tackle whatever listener questions you guys have. Tim sent this one in, and I thought it'd be interesting. This one came in last night. It says, today. Please tell me how this market can keep going up. Bad news today, all-time highs, doesn't make any sense. And I thought, well, we do have somebody with us who has seen their shares of euphoric bull markets and also, catastrophic bear markets. What would be your response to Tim here on, please tell me how this market can keep going up?
Well, the market is always forward-looking, and so if we look back to March when the first vestiges of COVID were appearing in the country and no one knew how to deal with it or what it was or how catastrophic it would be, it turned out to be obviously very catastrophic to the economy as well as people's lives. However, in this process, we started to understand more about the disease, and the market, being forward-looking, saw, kind of a point of time where things would start to get better. Now, that time frame had been initially thought it would come a lot sooner than it did, and so the market had a pretty vicious sell-off in March, thinking it was the end of the world. However, with understanding the disease and the effect on business, you saw a certain sector of our economy actually thrive. Those businesses that could be supported online, and people didn't have to go and commute to work, and so all of those industries that supported online commerce thrived, kind of stabilized the market, carried the day, and they're still very buoyant. It certainly has been a market that has been segmented in many ways. Many stocks have been on the exponential path higher, whereas many other stocks are still reeling simply because they were not able to, those companies are not able to compete and adapt and change in this environment. However, with the announcement and the progress of the vaccine, and now it's being rolled out, despite the economy still being soft, very soft, and despite unemployment being much higher than anybody wants it to be, and actually being in a recessionary environment, the market being forward-looking is look past all that, seeing the light at the end of the tunnel, and a way forward from the depths of despair that we've all been in for the last 10 months. And so that's why we always preach to our students, and some of you know that I'm an instructor for Online Trading Academy, that you have to trade what's in front of you. You have to just look at the data and not be deterred or not be influenced by the noise outside of the market. And the market gets it wrong. Don't get me wrong. Even in the fall of 2007, when the subprime mortgage stuff, that was all out there. Everybody knew about it, but the market was making all-time highs. But it was only when Lehman Brothers and Bear Stearns and AIG blew up that there was a real discovery, so to speak, of things underneath the surface, and then the market crashed. And then in March of 2009, it started to bottom out and look forward to the day when the economy would start to higher again. And we've basically been in a bull run ever since, despite the a couple major sell-offs along the way. And so what happened in March and April is very unusual. If you look at a chart to see that kind of V-shaped recovery, generally speaking, when there's so much damage done to the market, it does not rebound very quickly. But it did this time, confounding even the experts, and really has been carried by the companies that have been thriving in this environment. And so just kind of pulling other things up with it. And despite these little pieces of bad news, constantly looking forward. Okay, they're going to do a COVID relief bill. It's going to happen. The vaccine's going to come. And so now those things have actually come to fruition. And you would expect there might be some sort of sell-off or pause here now that the good news has been processed and is in front of us. So it wouldn't shock me or anybody else for that matter to see, a backtrack here, because the market is, in technical terms, overvalued. It's at its all-time highs, and the business environment isn't really supporting that yet. So don't be surprised to see a pullback, but in the meantime, timing is everything. And so you can't guess when that's going to happen. You can't get a grudge against the market. And on the flip side of that, you can't get married to things either and expect them to continue to move exponentially higher. So there's an ebb and flow to the market. The thing about identifying when stocks are cheap or expensive, for that matter, we use technical analysis, because inherently we don't know. So if Jim Cramer tells or on his show tonight, and I never watch it, I assume it's...
Thank you. I would probably have to boot you from the program. I don't either, but I guess it's entertaining at least.
Well, I'm never going to vilify any analyst for that matter. They're doing what they feel is right. Some of them may have alternate or conflicts of interest, certainly, but their ultimate goal is to put people into good investments. So the problem, or their Achilles heel, I should say, is no one can predict the future. And so they take everything that is legally known about any company or any instrument for that matter, and extrapolate that the path it's been on is going to continue. And so no one can predict a trade war. No one could predict COVID. No one can predict anything with a sense of a stock price out in the future. They're giving their best educated guess, but those that see an upgrade in the morning and then chase after that stock because some particular brokerage house thinks XYZ is going to go to 30 and it's trading at 20. Oh, I just buy this. So what if I have to pay 22 for it?
Right, exactly.
They say it's going to 30. I'll make a lot of money. Well, what they don't know is something could come along. There could be a competitor. There could be a recession. There could be a myriad of things to blow up that idea. So if you like the idea, then you take that idea, what Jim Cramer says, or anybody else for that matter, and you try to identify, is this individual advocating me to buy this stock at a good price? What do you mean a good price? Well, I mean, things go up and down. The market goes on sale all the time. What people, especially novices, and most investors, I guess I should say, don't understand is that tracking price goes on sale. There's wholesale and retail levels of price that's baked into a technical analysis chart, a historical map, if you will, of price for anything. And so you can tell quite easily once you get trained to identify, is this stock trading at a discount? Is it trading at its all-time high, or anything in between, to make a better acquisition? We do it all the time as consumers. We look for bargains. We are loath to pay retail for anything. But for some reason, when it comes to the market, this fear of missing out, this belief that there'll never be another time that I'll buy this stock. I mean, after all, why would you ever buy a stock? You think that 5 minutes, 5 days, 5 years from now, it's going to be higher than what you pay for it. You can sell it to someone else. And so that's your only motivation. If you understood that you can buy stocks the same way you buy anything else, wait for a sale, wait for Black Friday, or the equivalent of that in the market when you have a sell-off in a stock, and just pick it up on the cheap, or cheaper than where Jim Cramer is telling you to buy it right now. And if you miss it, you miss it. But I can tell you that there have been thousands of trades or investments that I've missed, and many more than I wish I had missed. So,
and there will be many more down the road that you're going to miss too. That's missing trades right. Is no big deal. And Tim, I think I share your questioning the market. Like, how can this keep going up like this, right? And it's a question that a lot of people are feeling. And you have to look at it this way. Adam in here says it's all about price action, and I agree. Right now, you have, I believe, more of a FOMO, a fear of missing out, and almost like greater fool theory. And I love what Craig just said is, we all know when something's on sale. Anybody who knows me, I'm an expert at this. Like, I won't buy anything until I see it go on sale. For example, holidays are coming up. Prime rib is one of my favorite things. I've been waiting for the sale to hit for prime rib because I sure as hell ain't paying $8.99 a pound. Well, guess what? The ad showed up in my mailbox yesterday. $3.99 a pound for prime rib. You bet you know what I did. I bought 2 huge ones. One's going in the freezer. One's going to get cooked on this weekend. But I'm always looking for the deal. You look at this market, and if you are a fundamentalist and you look at what their true valuations are, most companies right now are above what their share price is above what their valuation should be. So it leaves you scratching your head going, they have to come down. And the truth is they probably will at some point, just not now. And to your point, what's driving the market? I'll give you a simple thing I like to do with every trade I make, which is look at the good side and look at the bad side. So if you're bullish on something, certainly you're going to look at the good stuff because that supports your trade, but always look at the bad stuff too because that may convince you not to make the trade. In our markets, if you look at the bad stuff, what's the bad stuff? Big unemployment, bad economic data, potentially people out of work. That means they're spending less, and you feel like that's the worst part of it. Well, the crazy part, if you think about the good side, is the federal government and our Treasury and the Fed have put more money into the economy than those people collectively would have lost if they were all unemployed for the year. That's what's happened. So we still have this bad fundamental piece, which should, if everything was left alone, that market would be collapsing. Instead, we have this one side of the equation that is putting so much money into it that it's forcing it up, and now banks are borrowing cheap money and they're looking for a place to park it, and now we have this big run. So, buy high, sell higher is the attitude here until it changes. And it will change at some point, and hopefully when it does, I'll be in some hefty short positions. But, back in 99, 2000, I saw more people go bankrupt and disappear from that trading floor than in any profession I've ever been in my life, because people were shorting in 98 and 99 during that dot-com bubble and got absolutely smoked and disappeared from the trading floor, never to be seen again. Some people hit it and made a lot of money, but most people I knew lost on that equation. Similar to what we'll see here going forward in the future. It's just a matter of when. Right now, follow price action. There you go. That's my rant.
Good, and it's a good one. And if you don't have to look too far to see kind of the craziness that happens out there. Let's take a look at Airbnb, for instance, which is an IPO, and everybody, unless you're living under a rock, knows what Airbnb does and what their business model is. However, they had an IPO, and and again, maybe you can help me with this, Merlin. But they had an IPO, and the IPO, the underwriters valued the stock at X price, and I forget what
I believe
it was.
They started at 45, and then it jumped to
$45.
60, and then it was like 80, and then it opened up at 145.
So here's what people do. I mean, it's just absolutely insane. So the underwriters think the fair value of this stock is $45 because, believe me, they'd want to sell it for as much as they possibly could. Certainly Airbnb would want to distribute their stock or offer their stock for as much as they could possibly get it. So the smart people, so to speak, on Wall Street then underwrite the stock offering feels the fair value is around 45. Did you say, Merlin?
Yeah, I believe that the expectations were 40. It was 44, and then they jumped into 60, and then 68, and it opened at 145.
Well, where it opened is not where the people that got the IPO.
Right. Oh yeah.
At. So the IPO price. So let's just say it was 60 for whatever. For lack of knowledge, maybe somebody out there knows exactly what it was. But when it started to trade publicly, it opened at $144. Now, I mean, that is absurd. And on the day that it opened for the first day, which was only a little over a week ago now, it may have opened at 144, and you might have said, well, that's crazy, but it had a high of 164.
Yeah.
Okay. Now, in the meantime, it sold back down to 121. So and at 121, it's still pretty expensive, right? And so you can see on a chart where things are expensive or at a discount. And if we have some patience in this market or any market or for any stock for that matter, you're going to do a lot better by being selective, not just running out and buying willy-nilly because someone else tells you to do that. You don't do it as consumers. If I were the Jim Cramer of the auto industry and I was doing a seminar and everybody at that seminar had to buy a car in the next 2 weeks, and I stood there for an hour and made a case that you have to buy, this Hyundai Sonata. It's the greatest value for the money. It's got great warranty. It's got bells and whistles. Fantastic vehicle. You would not run out of that seminar, walk to your nearest Hyundai dealer, say, how much for that black Sonata on the floor? The guy says $30,000, and you say, buy it, gotta have it. Jim Cramer told me I got to buy it right now. No, you'd say, oh, well,
here's my price.
Around.
Yeah, exactly.
I'm going to go shop around for it. And so you wouldn't do it for a car. Why would you do it with a stock? The same thing goes with, we inherently, what's baked into our being is how expensive or cheap commodities are. You know when gas is cheap. You know when it's expensive. You know when coffee is cheap. You know when it's expensive. You know when eggs are cheap. You know when it's expensive. But what people don't really know or recognize, that you can identify when a stock is cheap or when a stock is expensive. And so that's what technical analysis is. It's not that difficult to learn how to read a chart, to understand its historical price action is all baked onto that chart. Mm-hmm. When it was cheap and when it was deemed expensive, just simply by the action and the price points where things rallied from or where things fell from sharply. And so you can do a lot better by, putting that tool into your tool belt and recognizing it, because most people do not.
Right.
Most people just run out and chase, gotta have it.
It's emotional.
It's totally emotional.
Craig, we had a guy in the program who was asking me specifically about Airbnb. Some of you might remember that on this show. Guy was saying, how do I get a hold of the IPO shares of Airbnb? And I said, don't. You're not going to get that $40 price. You're not going to get that $60 price. They're doing everything in their power to hype these things up. And sure enough, it opened up at 145, as you guys can see in the chart. It was the same thing for, what was the other one that came out? DoorDash, right? DASH.
DoorDash.
And there's another one that was way higher than its expectations. This one's just been selling off ever since. And, it's troublesome when we see things like this, because obviously we want to get a good deal. But, as Big Eb points out in here, Airbnb has a market capitalization of $88 billion, right? This is almost as much as some of these big financial firms we talked about, like Goldman Sachs. Now, riddle me this, everybody. What's the PE ratio for Airbnb? Right? The PE ratio, price to earnings ratio for Airbnb. Now, obviously, we know when we have tech companies, generally they're very high PE ratios because the price is much higher because it's the expectation of good things down the road. Now, as a long-term investor, great. As a growth investor, that's fine. As a short-term trader, it doesn't make too much difference to us. We just have to practice good risk management. But I'm waiting for people to type in. There's about a 30-second delay between speaking and actually showing up on the YouTube stream. So, now what do you guys think that PE ratio is? Just for fun, I will bring over the chart of Airbnb right now. And I'll bring that one up here, make it full screen for you guys. So I'm just going to simple Yahoo Finance, no big deal here. And I'm on Airbnb. See it currently trading at 147. Kind of love that. I'm going to scroll down here, and you guys see on the right-hand side of my screen, I will zoom in here, try to make it as big as I can. You guys can see this little financials table. And here it shows you the revenue and earnings for the last 3 years from 2017. Notice revenue has been climbing. This is great. It's been looks real good. It went from $2.5 billion to $3.5 billion to almost $5 billion. So you're gaining about $1 billion in revenue each year. But look at the earnings. They're losing money. So its PE ratio is negative. It has none. There's no PE ratio. So you have people flocking into this stock to buy this company of Airbnb, and their valuations are just not there. This is the problem now. So I would ask you, is this overvalued? Is it cheap or expensive? At this point here, I'd say this thing's extremely expensive. They'd have to fill some incredibly lofty shoes to warrant that valuation of $88 billion. And, to be 100% honest with you guys, I personally see this business as being a dead business. You know why? We had Matt Leising on the program the other day talking about Ethereum. Part of the decentralized nature of things will be applications that do Airbnb without Airbnb needing to be in the middle, because they'll charge you about 30% extra. I'm sure every single person here, if they could, would you like to save 30% on your home insurance? It's not Geico, it's going decentralized. Would you like to save 30% on your car insurance? Would you like to save 30% on your groceries? How about on any purchases you make? All of that can be cut by about 30% because these firms have to charge so much money for advertising, or pay so much money for advertising, that passes on to us, and we end up paying a lot more. So decentralized networks like Ethereum we talked about, they'll be replacing Airbnb in a few years. So if you're long and strong on Airbnb, you may want to lock in some of that profit.
Yeah, I think you always have to recognize that the core of our capitalistic society basically is building a better mousetrap, and competition comes in, and just look at poor Groupon. I mean, I have firsthand experience of that because one of my daughters worked for Groupon at the time where they got $6 billion offer to sell to Google, turned it down, and that was the worst thing they could have ever done, because what they didn't realize, and when they had an initial public offering and it ran up initially, but what they didn't realize is that their business model could be so easily replicated, and that's what happened. And so I don't know what the stock is now, but it's
at $39. But
yeah,
you have
I think
to.
it had a reverse split in there.
Yeah.
A few times. I'm looking at a chart of XPEV.
By the way, real quick, let me just mention this.
Yeah,
Groupon, by the way, guys, did a 20-for-1 reverse split. So you're looking at the price of $39 right now thinking, wow, Groupon's doing great. No, a 20-for-1 reverse split means this thing was trading under $2.
Yeah.
And, if you go back and look at Power Trading Radio when we first started, I was hammering the table saying, guys, short this stock when you can. I'm sorry for your daughter, but it's a company that does coupons. You tell me that the Sunday newspaper is going to go up in value and do an IPO because of the coupons that come in the comic section? No, sorry. And I use Groupon all the time, but didn't warrant that kind of valuation. Anyway, my soapbox is gone. Where were you headed?
No, I was heading towards another one, the electric vehicle space. And, and even this week, Baidu, which is, kind of a Amazon type of Chinese firm, but not as big as Alibaba and so forth and so on. All they had to do was saying they were investigating getting into the electric vehicle space, and they ran the stock up like 20% in about 3 days. And if you look at a chart of XPEV, which I'm not here to talk about the merits of this company or whether it'll ever make money or not, or whether it'll be the next big thing in the electric vehicle industry. But if you look at the chart, it literally, in a matter of how many weeks here? So if I look at a weekly chart, in a matter of 1, 2, 3, 4 weeks, in 1 month, it went from about $20 up to over $70. Okay? Now, that's insanity. And obviously, the guy that paid $74 for it, they know who they are right now. Now it's
so does their broker.
Now it's trading, in the mid 40s. So okay, well, it's cut its price almost in half in the next 3 weeks. And so this is what we're talking about.
They're good-looking cars, by the way. We did a show on this a while back talking about some of these energy or alternative energy vehicles or electric vehicles. I'm going to bring the page up here, and obviously I'm not here to sponsor or endorse any of these companies, but I love this. It's the P7. Check this one out, guys. I know, Craig, you can't see it, but I've got the... I went to XPeng's website. And by the way, I don't know, you can pronounce XPENG, XPeng, I'm assuming. This is a stylish looking car, these are nice vehicles, but everybody has that same basic chart. Not everybody, many have the same basic chart. NIO does not, right? So you guys notice the NIO chart here. You see the big run up. At least NIO's has been somewhat steady. Now let me just go to Nikola, NKLA. That's another one we were talking about. Doesn't this picture look very similar to what you saw on that one that XPNG, which Craig was just talking about? Huge spike up. I mean, this thing went from $10 up to over 90, and now it's trading at 17. Who knows what XPNG will ultimately do? Oh, was it XP? What's the symbol?
XPEV.
EV. Okay, I had it spelled wrong. This is that similar type of picture, and I always talk to the viewers about this. When you have these parabolic moves, these colossal swings, this is where you really have to rein in your fear of missing out and say, okay, maybe XPeng will be great. Cars look good. I don't know any difference on them, but as far as fundamentals, but maybe we wait for that $30 price to hit because it looks like the origin of a nice big jump to the upside here. Well, it may never get back down there, and that's the challenge we face, Craig. How do you deal with that? Buying something that you want, but you're worried that you're going to miss out and not get it, so you just jump in right now.
Well, I don't do that. So,
you and your discipline, damn it.
I don't worry about it. Now, I marvel at it. And so, the guy, the person that, if they liked it at $93, they're going to love it at $16 or whatever it's trading at right now. So, it's just nuts, but people do this in the market all the time, and unfortunately, it's quite painful. And but it's because they lose all sense of their consumer behavior that they have. They'd be repulsed to buy a 32-inch television for $500 right now, and they can get one for 110. And so, thank goodness we don't have. Well, look what they did for the COVID supply.
Right.
For the personal protective gear back in March. It's supply and demand. That's all it is.
Yep.
And so there was incredible demand, no supply. People got ripped off. And sure, I get it. I mean, if you wanted to survive back in April, you needed all this stuff, and you were fearful, and you were wiping your groceries down and everything else. And so, if you paid $10 for an ounce of hand sanitizers, that's what you had to pay. But for the most part, we as consumers, we look for bargains. But people just tend not to do that in the market because they think this is different for some reason.
Yeah, it's scary, and I think the best thing here, and this is why you guys have heard me so many times, not just on this program, but back when I was doing power trading radio, as well as in any class I'd ever teach. You have to kind of get your emotions in check and shelve that. Man, I'm going to miss out. I got to jump in on it now, and evaluate things better, because we talked about Nicholas straight up. I'm usually pretty brutally honest with it, and that was one I was like, just stay away from this thing. It just doesn't look quite right. And again, these SPACs, these special purpose acquisition corporations, you guys should be very careful with anything that comes from a SPAC. I'll ask people, why do companies use these SPACs, these special purpose acquisition companies? Any guesses as to why they would use those as opposed to do a traditional IPO? Like why not just do a standard IPO? And by the way, there is an exciting announcement today with regards to IPOs. Coinbase just announced today they're going to be doing an IPO, and that one will be probably the most watched IPO of 2021 when that happens. It's going to be crazy because it's the first real legit crypto exchange that's publicly traded. That will be a wild one.
Is that tomorrow?
No, they just filed their intent to go public. So my guess is that'll probably be for Q1 of next year. But there's nothing out there that's publicly traded like that. So to me, that's going to be a wild one. We'll talk more about that. Why would you stay away from the SPACs, guys? Adam says they don't have enough revenue or investor backing. That's partially it. When you do a traditional IPO, there's a lot more regulatory hurdles or checks that you have to go through, right? So basically these SPACs can kind of get around a lot of the reporting that they're supposed to make. To me, that's scary because I want an IPO to have to do all the due diligence and go through the financials and prove the background of all their shareholders are legit and scrupulous people, not unscrupulous people, as we've seen for some of these companies. These SPACs can get around a lot of that stuff, so you should question anything that comes to market as an SPAC with a little bit of okay, this might not be as good a quality as a regular IPO because they just simply didn't have to go through all the checks that every other company would have for a traditional IPO. There we go.
Good. Well, you just taught me something.
Yeah, well, it's funny because now the way to do it is SPACs, right? You buy some crappy little shell company that's trading at 10 cents. You buy up all those shares and then repurpose that and then, buy another corporation with it. So, we could buy a company with this shell corporation, not have to prove any financials or anything like that, and boom, we can do a quote-unquote IPO, which is nuts. Anyway.
Again, our job isn't to, understand all the intricacies of these types of things. It's just our job is to make some money. And if you want to make money in the market, it's the same thing that, any company does to make money. They buy things cheaply, repackage them, and sell them for as much as the market will bear. They buy wholesale goods and services, repackage them, sell them as much as competition will allow. If you want to make money in the market, you buy things cheaply and sell them for more.
And you should always be and you should always be thinking that if someone's telling you to buy something, there's a vested interest usually on their part to get you to buy that. I mean, again, the best example I could give you is just to go to YouTube and type in Jim Cramer manipulation and watch what he talks these hedge funds are doing. He says he didn't do any of these practices, but come on, people, he wrote the book on it. So, you got to be careful anytime someone's encouraging you or pumping a specific company. Quite often, they're just looking for somebody to boost the position that they're in or find a buyer for their shares they're looking to sell. A lot of these technology companies are in that same boat. So I would make the argument that a lot of stuff is expensive right now. And you know what? It's probably going to get more expensive going forward until the market will finally not willing to pay those elevated prices. And then we'll have a pretty substantial correction. Just don't know when that's going to happen because we have that Fed pumping it up every single day. It's great.
Well, there's no competition right now for stocks. And so that's what we've got. Where are you going to put your money? You're going to put it in a CD that yields 0.5%, or you're going to take a flyer with the market. It's okay to buy stocks.
Yeah.
It's great and fine to buy stocks, but you can't be frivolous or believe that that someone's going to come along down the road and pay you more for it, especially if you're making a bad buy.
Yep.
There was just one of my other daughters came to me today, and she said, "It seems like every Chicago Bull," and so I'm from Chicago. Seems like every Chicago Bull that's no longer with the team. So they had to, obviously, when they were with the team, they had to buy homes. It seems like every ex-Chicago Bull has had to sell their house for less than they bought it for. And I said, well, when did they? She was talking about Joakim Noah, who used to play for the Bulls.
Oh, yeah, love that guy.
Yeah, great. And said, well, he sold his house for $450,000 less than he bought it for. I said, when did he buy it? 2008. So it's like we lost our collective minds back then, thinking that real estate was not just another asset class, and that it would continue to go up. And it wasn't just the consumer; it were the banks and the housing industry and the real estate, brokers, that industry, and even Congress, who opened up the subprime mortgage arena from what it started out as a good idea under the Clinton administration, and Wall Street took it and ruined everything. And so it happens. And will it happen with real estate again in certain areas of the country? No question about it. It's still happening. It's just not happening in Chicago. So, unfortunately,
son of a biscuit.
Real estate there.
Craig, I know you're down in sunny Florida, escaping the frozen tundra that is Chicago in the wintertime. How's your teaching going? Where can our viewers find you and join you for some more education?
Well, pretty much. So I'm in a high risk demographic as far as my age, and so I have been sort of confined to teaching online, which I had never done before last April, but I found myself to really enjoy it. And so that's what I've been doing. I've been teaching my futures and core strategy classes for Online Trading Academy exclusively online since April. I have been averaging a class a week. My next class will be in, I think, January 9th. That's an online core strategy class. February, I have nothing, but March and April, I have first a core strategy class and then a futures online class. I've been doing some futures XLTs along the way, and I hope to get back on the road as well because I really do like visiting other centers and engaging with students in person, getting to know them a little bit. So I'm just waiting my name on a list to be vaccinated, and hopefully come March or so, I'll be getting around again. But in the meantime, you can find me online.
Nice. Well, we always hear such great things about you in the XLT sessions, and I'm hoping we can get back into some semblance of normality so you can be teaching physical classes. I miss the interaction with students on a regular basis.
Yeah, we all do, and we all miss what was. So it's going to happen again. There's a light at the end of the tunnel. I really believe that, and hopefully I'll be seeing all of you out there, both in person and online in the near future.
Nice.
So just stay safe, stay healthy. Don't be silly now. We see kind of the end game getting closer. There's no reason to give up your guard if you've been keeping your guard up all this time. So
that said, I'm having a kegger at my house this weekend. Tell all your friends. Craig, thank you.
Didn't invite me.
Yeah, well, you're a little bit far away, but who knows? Who knows? All right, Craig. Well, thank you so much for sharing some insights with us. I look forward to having you back on again soon. Hope you and your family have a great holiday down there in Florida and safe return to Chicago.
Thank you. Same to you, Merlin. All the best to you and your loved ones and everybody out there. Have a safe, healthy, happy Christmas, happy New Year, and a great 2021.
You too. Take care.
All right, thanks.
Guys, that was Craig Weil coming to us from Florida today, talking about, more about psychology, price action, understanding the hype, which I think many people are falling victim to, which is buying things that are way too overbought. But, things can be much higher than they are from these levels. Real quick, I saw, Alex, you were asking about a good book. I posted a link out there. That's to one of my personal favorites, which is The Intelligent Investor by Benjamin Graham. I mean, if you're looking at fundamentals and thinking big picture and when is a good value buy, Benjamin Graham literally wrote the book, and Buffett kind of followed his lead. So, if you're into Buffett and his type of mentality, that book that I posted there, it's a PDF, it's free on the internet. So I just posted that one there for you. That's a good start. There are a couple of others if you are looking for more fundamental analysis, but Peter Lynch is obviously one of the go-tos with regards to fundamental analysis. What else do you got? Comes off the top of my head. William O'Neill as well are a couple, good names out there and decent books. You can check those ones out. But I want to throw you out that free book there. What else do I have here from viewers? Can't miss. Okay. Well, I don't think I missed any real questions per se. I'm looking to see if I can find any. Again, if you want to see Craig, he does a lot of XLT sessions for core strategy as well as for futures. Hopefully he'll have some physical classes coming up here soon, but always great having Craig on the program. But back-to-back Chicago floor traders, guys. That was pretty cool for me to have back there. All right, I'm going to go to some economic calendar information. I'll go to listener questions here. I know a bunch of you probably want to know about cryptocurrencies and Bitcoin and all that type of stuff, so we'll take it from baby steps and see if I can keep it under 2 hours. Here is the economic calendar I wanted to bring up. This is what happened out there today. Now, on the 17th, which was obviously today, you saw there's a couple announcements, and most of them were pretty good. You saw Rite Aid, which if you owned the shares, it was pretty rad as well, rad being their ticker symbol for Rite Aid Corporation. They were expected to lose 1 penny, and they came out with 40-cent gain. That is a pretty impressive beat, 4,000% gain. Coach, I put the link up there a little bit further up. You can just go look for a highlighted link from our comment from myself. It should have a little yellow highlighted box. So that FedEx reported, but what's interesting is I read that they didn't offer any guidance for 2021, which is very interesting. Usually these companies, that's how they thrive and move markets. And my guess is that's why it's down almost 4%, is based off that people's skepticism on why wouldn't you at least say something about that one. All right. Here is what's happening today with regards to economic announcements. Now, there were a ton of them. We did have a couple central banks reporting numbers. You saw the LIBOR come out, or Swiss National Bank policy rate come out at negative 0.75. You can see that the British pound also came out with their rate statement, which all of them were unchanged. Nothing moved there. UK right now is at 0.1%. Now, as far as U.S. goes, we had conflicting information. You see here our unemployment claims have risen for the second week in a row, maybe third week in a row, which of course is not good, especially if we get back above that million mark, which is a pretty big psychological level. The building permits numbers increase significantly. That's obviously great for the economy. The more building permits, that's more consumption. That means people are buying sheetrock and nails and wood and furniture and all kinds of stuff to redo parts of their home. That's very positive. And housing starts were also up more than expected. I believe that's probably why you saw these markets rally up today. That and the fact that we'll probably get some announcement on stimulus tomorrow before our politicians finally take a break for the holidays, because they've worked so hard at doing their jobs. Now for tomorrow, not a lot of them, but there are a couple big ones here. You can see you've got Nike reporting earnings tomorrow. You got Darden Restaurants. You also have Carnival Corp. Now, Carnival, I believe, has been saying they're supposed to report every week, and they just keep kicking the can down the road. So we'll see if that actually happens. Also, Winnebago, WGO, reporting earnings. I'm hearing a lot of real positive stuff from Winnebago, basically saying that they can't keep their stuff on the shelves because, you know what? People are getting in Winnebagos and just deciding to travel and get away while they're out of work and quarantining. So Winnebago reports earnings before market open. So does Darden. Nike's aftermarket close, and we'll see what happens with Carnival. To me, that is a sinking ship. Now, on the economic calendar front for Friday, still quite a few big announcements. Our retail sales numbers blew my mind. I did not expect to see the U.S. retail sales numbers as appallingly. I actually thought we'd have a positive beat on retail sales for the U.S. We came out at negative 0.9 yesterday. That's ugly. Canada reports their retail sales numbers tomorrow. They're expected to go from 1.1% down to 0.1%. So a 1% slide there, but still positive at least. We also have for the U.S. current account. So I highlighted those right there. So Canada and U.S. are the ones in the red box. Other than that, not too much of the groundbreaking or landmark type of economic announcements, but certainly the retail sales number for Canada could be a big market mover. All right, Adam says, one question if possible. Do you know of any good screener to use to be able to find stocks at swing lows or lows of ranges? Not really. A lot of that you'd have to program in. I don't know specifically if you can say, hey, find me something in a demand zone, because the computer's going to go, well, what demand zone? What are you looking for? Now, there is one out there. Let me see if I can bring this up here. Stock Fetcher is one I used a while back, and you guys will probably understand this by now. I am not one who likes to pay for stuff, so if I can find things for free, I'm going to go with it. Here's one that you can do a lot of customization. You could probably, if you were smarter, or smart enough, or way smarter than I am, that's for damn sure, go through here and start to code this. Because you'll notice here, Stock Fetcher will allow you to scan markets for specific criteria. Now down here, here's some quick examples. So you can see price action, all right? Show me things that have dropped more than 10% or 4 consecutive days of gain. So these are just some of them that you could go through. There's a lot of different price qualifiers. For example, show me something that's been near the close near the top of its 45-day range. So that could be, if you're looking for something sideways trading and maybe some spread trades with options, these could be great opportunities. I really like to only use them for candlesticks. So you guys remember, I'm a big candlestick guy. So let's say you wanted to go for hammer formations. Now it's bringing me up those candles that have hammer formations, right? And I can go view full results. Now, it will only give me a few in the free paid version, right? It only gives you, I think, 10 maybe. Now, one thing that you want to make sure when you're looking at these kind of scans and filters, and let me zoom in here, is make sure the data fits what you want, Adam, right? Because there's one thing to run a scan for whatever it is that you're looking for. The other part is 90% of that's going to be crap, just stuff you're not going to use. So, for example, I'm not trading stocks that are below $5. I use 15 as a benchmark. So right there, I'm changing. Let's see how many did it tell me there were. Oh, 1 second. Let me zoom out here a little bit. Sorry for the screen constantly adjusting. There were 41 companies that had candlesticks, hammer formations on as of Wednesday's close, right? So that's yesterday. It's only going to show me 5. You have to pay for the rest of the results. But if I run this now, it's going to drop from 41 to 29. Simply by jumping up the price. And let's be honest, the way these markets have been moving up so much, there is pretty much nothing under 15 bucks anymore, right? It all seems to be way overpriced. Now, here's the other part. Average volume, and the 30 means the number of days. So average volume for the last 30 days is above 250,000. That's not enough for me. I'm going to go 1.5 million. I need liquidity because I tend to trade big share size sometimes. So now it's going to go from 29 stocks to 7. So right away, I've taken it from 41 companies down to 7, and I can save myself all this time because I know those other ones I wouldn't trade because they're illiquid and they're too cheap. How am I going to short something or go long short something that's $5? It's not really my style. So now the other part is you have to be careful here because let's look at some of these pattern formations. You have a ICLN. All right. Actually, let me do this. Let me bring it up, move it over here, and I will bring up the trading platform on that side so that you guys can see it because it's a much cleaner picture over here with the on this screen. So we'll bring it over here. The first one, I'm going to do all 5 that it showed me. You guys tell me which ones you like the best, okay? And Big Ab's probably going to love it because it's going to be an hour show today. Damn it. All right, Key, K-E-Y. Don't know. Oh, Key Corp, okay. It says that's a hammer formation. I would automatically look at this and go, no, I'm not interested. That's just kind of sideways basing. It actually looks weak to me. So no, this is not a tradable pattern for me. ICLN is the second one. This is actually not, it's a hammer formation if you just look at that one candle by itself. Technically, this is what's called a hanging man. A hanging man is a hammer formation that's at the top of an uptrend. I don't know, Steve Nissen calls this a reversal formation. I actually think it's a sign of strength. So I'm not going to be positive on that one, right? I don't really like that one. It doesn't call out to me. How about net? Here's your next one, net. Again, you've got 2 hammers in a row, sideways action, all right? No big deal. What about PGX? PGX. And this is why we have to be selective. Okay, so this is the same thing. It's a hanging man formation because it's after a really long uptrend, but this time the candle's red. That certainly makes me feel a little bit more pessimistic on this one, but it's still real strong. I mean, if anything, I'm just looking for a buy point on a pullback. So again, 4 out of 5 covered so far, and not one of them gives me a great opportunity. CTVA is the 5th one. And you guys can see it had a hammer formation yesterday, but it's just in sideways action. So none of these worked for me. None of them. So let me flip this over, and I will go to the shooting star, because that's my other pattern that I like. Let me just real quickly change my screen here, go back to Stock Fetcher, and I'm going to make this shooting star just to see, because everything's in an uptrend right now. So maybe the shooting star gives me some more opportunities. All right, so bear with me. I have it off to the side here. And I'll just bring it back over so you guys can see what I'm doing. So there's your shooting star formation. Closes above 5. No, I want it above. You're going to short something above at $5? No, you're not. It says that there's 198 stocks right now with a shooting star formation. I will fetch stocks. It goes from 198 to 133. Now, it doesn't say anything in here about volume. So let me see if I can do this. I don't remember the code. I think it's and average volume. And I think what they do is they do it right after. So it's like 30 above 1,500,000. I'm hoping I did that right. I'm not the big coder. And it went to 1. I'm guessing. So you have, it basically said there's only one company with a shooting star. Alex, which book did you order? What did you order? Oh, you paid for it, Alex? Always come to me, brother. I'm the free 99 guy. Come on. I just put the link in there for free. For the rest of you guys, there's the link for the book for free. And I'll put it right there. That's the book right there. That's The Intelligent Investor by Graham, which is one of the Bibles of longer term stuff. All right, so yeah, this eBay, let's see what eBay looked like, and then we'll wrap this thing up here. EBAY. So I've looked at 6 different charts. None of these look like real great shooting stars or hammer formations that are even potentially tradable. So again, going back to Adam's initial question, I don't know one specifically where you can say, hey, find me something that's sitting in a demand zone or supply zone, but you could go through and say, maybe in the code, is sideways price, price has gone sideways or moved within a specific range for the past 3 or 4 days. You know, that might identify a level of consolidation, supply or demand per se. And you'd have to do a little bit of coding there on your own. But unfortunately, I've got a lot of skill sets. Coding is certainly not one of those. But you know, you can run through here. Stock Fetcher is a great one to play with, and certainly don't pay for it. You can, if you find it extremely beneficial and you want to get access to all the list. You know, for example, it said there were 198 different shooting star formations. Well, it's only going to show me 5. Do I have the book Momentum Masters? I don't know. I don't believe I do. I don't believe I do. Why, do you want it? I'm like a book peddler over here. All right, that's going to do it for me for today. Tomorrow, I've got a whole bunch of listener questions I'm going to be answering. I've been kind of putting some of those off. I have some options-related questions. I have a lot of cryptocurrency stuff that you guys want to go into. I don't know if you guys caught the move today, but just look at the chart of Bitcoin. I mean, you talk about an amazing move. I actually... Well, you know what? It should be just like 5 comments up, guys, is my link in the chat. You should see it says, did it not show up, guys? Right? There should be a link from me, https://bit.ly. You guys see that? It should be there. Huh. It won't let me post links in my own chat? That's kind of interesting. I wonder if I've been censored by Google. It should be there. Huh. It's weird because it's showing up on my screen. Tell you what, I'll do this. Okay. Well, that's weird. Let me just real quickly, I'll change over here and I'll go to Twitter and I will post it there. So I think that this should show up. Let me go bit.ly. That's so bizarre that it doesn't copy. So I'll throw it on. Just let me put it up after the show. I'll put it up my Twitter feed as soon as I get done here because I feel like I'm stalling and doing too many things. But I'll post a link. It's at TraderMerlin. So if you go to Twitter, just look at TraderMerlin. You will see it there. I've posted I have posted in the comments, guys. Here it is again. I just posted it right now, and I can see it showing up in your chat on my screen. Here, I'll even show you guys. Let's see if I can do this. So here's my my screen. You guys can see it's right there. It's sitting there right there. It's there in the chat. Oh well. Cool. All right. Well, I will put it up on my Twitter feed again. Tomorrow will be all Q&A, so you guys can always help me out. Certainly by clicking that like button. If you have any specific guests you want me to bring on the show, you can always send those in at TraderMerlin@gmail.com. I think some people hate that I have this little graphic here. I was bored, and I'm not really a graphic designer, but that's what I put in there. So you can always email me at TraderMerlin.com or just go to the name you see here, which is TraderMerlin@gmail.com. You can email me there. Send me questions that you want me to cover for tomorrow. It's been a great week with regards to the crypto space, and I'll explain what an airdrop is and how I took advantage of the airdrop in a huge way on last Thursday. So a week ago, actually, took advantage of an airdrop. And I'll explain how airdrops work and what some of these little details of the crypto space are for those of you who might be interested. All right, that's it. That'll do it for me for today, everybody. Check out the Twitter feed, and you'll get that book, Benjamin Graham, The Intelligent Investor. Take care, everyone. Have a fantastic Thursday evening. I will see you tomorrow. Take care.